previewing the auto sales numbers that are starting to trickle through. It's the first full quarter post the GST rate cut or rate rationalization, if I can call it that. What within the auto pack looks most attractive? By the way, viewers, Dipan Mehta, Director, Elixir Equities, joining us as well this morning. Dipan, give us a sense of what you like within that auto pack.
Yeah, good morning and thank you for having me on your show. I think auto stocks have done exceptionally well in 2025 on the back of GST cut and overall revival in the industry where volumes also started to pick up. In terms of what to expect for December quarter and for December month, I think it'll be very positive. And on the whole, I think we have seen the premiumization trend also playing out very well for auto stocks. Having said that, I think across the board, I think auto companies are doing well, but our preference is for M&M on the passenger vehicle side because of its strategy as far as EVs are concerned and exceptional growth rate, industry-leading growth rates, better market share, and good cost control, a focus on returns as well, return on investment. And within the two-wheeler space, we are very positive on Eicher. Both these companies are in our investment portfolios and model portfolio as well. So investors need to take our view with a bit of a bias in that. Aisha Motors, because I think we've seen a revival in the volumes over there, and there's a great export potential for this company as well.
Deepan, if you look at some of the key sectors that were active in this kind of calendar year, IT, where we saw a lot of selling coming in from the foreign investors, but the domestic funds lapped up many of that liquidity which was there. Or for that matter, defense stocks, where defense continues to be buzzing. What's your view on these two?
See, I think defense is a well analyzed and I would say reasonably well owned sector. And although news flow remains extremely positive, I think a lot of the discounting has already taken place in these stocks. They are trading at rich P multiples. No doubt there's earning visibility because of bulging order book position, but nonetheless, there are always execution risks. And investors must not forget that there's a great deal of volatility in their earnings because end of the day, their sales are dependent on how much of volume they're able to sell based on the orders they have in hand. So I would be neutral as far as defense stocks are concerned. I would remain invested in them, but from a fresh investment perspective, better to buy them at a decline or when there's a quiet period as far as the sector is concerned. Now, when it comes to software, our view has turned positive. We expect a good trading rally in software services companies in 2026. It has been a laggard sector. It is underowned. You may have some short positions also over there. But with rupee depreciation and incrementally the proportion of revenues from artificial intelligence picking up for the sector as a whole, we are quite positive that software services companies may give good returns in 2025. Large cap, mid cap, I think across the board, we should see a decent rally in this particular sector.
Kunal, your take with regard to IT?
Yeah, I'll be bullish on the IT stocks and maintaining that stance. In fact, in the last 5 days, we've seen a 1500 point thereabouts, correction for the IT index. We were almost at 39,400, 600 for the IT index, almost a week and a half or back. And now we've come back, sub that 38,000 mark. So short term wise, also, I think we're looking at a point where these stocks have corrected by 5% to 10%. The only thing which has changed for the IT stocks is the relative strength. Uh, by that I mean, in the month of October, November, there was a point where Persistent and Coforge were the strongest mid-cap IT names, and then followed by Tech Mahindra, HCL Tech, and Infosys in the larger cap scale. Now the relative scale has changed for the IT stocks. You don't have Coforge and Persistent as one of the top performers. In fact, they have come back into a retracement zone for themselves. So I would believe that maybe these stocks could come back into a slight underperforming zone for the near term. But the tier two large cap names, they are the ones which starts to look attractive. So you've seen Wipro getting back into a breakout mode about the 200 DMA. TCS has managed to come back about the 3000 ish kind of a level. That stock has also confirmed a breakout above its 200 moving average. Infosys, which was languishing at the 1500-ish kind of a zone, that stock has made a good comeback above 1600 kind of a mark. So I would believe that now the beaten has sort of shifted towards the other underperforming names in the previous leg, and that's what I would believe from a short-term trading perspective one should concentrate on.
Okay. And what about defense, Kunal? Should one nibble onto defense names on every dip? Is that probably one of the strategies you'd use from a technical perspective?
So I'll be very selective over here, Harsh,
Okay.
because we are looking at a point where not all defense stocks are behaving in a very similar kind of a manner. For example, we've seen a point where the beta for many of the high beta stocks have changed and increased dramatically. You've seen the shipbuilders name, for example, Mascot Dock. You look at GRSC, Coach Ship, etc. These stocks have gone through a very sharper phase of volatility and correction. But on the other hand, the likes of BEL, Bar Dynamics, and maybe to a larger extent even HAL, these stocks are looking a little bit more stronger than the other peers. So if one has to bet on the defense names purely on a stock specific basis, I would look at BEL and Bharat Dynamics as the preferred bet so far. So it's just like what happens into a revival of every sector, whether it was metals a couple of months back, IT few months back. Prior to that, you need to identify a few odd leaders which could probably take the charge front. I think in that sense, BEL and Bharat Dynamics are the two ones which could have potential and leadership quality going forward. And once these stocks get into a revival phase, that's where you start to bet on the underperformers with the potential that these stocks may try and play a catch up and get that extra bit of alpha. So I think as of now, I will concentrate on the likes of BEL and Bharat Dynamics if I have to take a contra bet on the defense teams.
Okay. Deepan, would you, within defense, a quick follow on, would you prefer something like a Bharat Forge? Exposure in auto has a very deep defense moat. Also, something like an L&T, infra plus defense. And defense in terms of capacity utilization, not particularly large, right, where L&T is concerned. So, plenty of capacity which they've put up yet to be fully utilized or fully tapped into could well be something which they take advantage of in this cycle.
Oh, no, no. I think in defense, they do focus on the PSU defense companies, be it Bharat Electronics, Bharat Dynamics, Hindustan Aeronautics, and there are the shipbuilding companies also. And there's a lot of push being given by the government for shipbuilding within India, large outlays over there. So I think you are best off with the public sector defense companies, or then if you still want to indulge, then some of the purely defense oriented private contractors could be Zen Technologies and similar companies. So I would stick to that. I'm not greatly in favor of companies which have many other divisions and defense is one of them. And that could be a growth driver. But if you want to play the defense segment, the best way to do is through PSUs. They are preferred suppliers. They are getting technology transfers from foreign majors. They are sitting on very, very strong order book positions. And these are the companies which the government goes to immediately whenever they have a requirement. So I would stick with these well known names and wait for corrections over there. And I would just like to add that because of earnings volatility from time to time, we do see steep corrections in these stocks, and those are great opportunities from investors who are underweight defense.
Okay, while we are at it, we have Ishika standing by. She's got Bharat Forge on her list of stocks to watch. Ishika, what else do you have? You've obviously got Bharat Forge. Talk to us about all the stocks on that list of yours this morning.
Definitely. So other than Bharat Forge, we have steel stocks in news this morning now, such as Tata Steel, JSW Steel, JSPL, right? Now it's because the government has imposed safeguard duty on imports of certain steel products from China, Nepal or Vietnam, right? Now this safeguard duty will be imposed in a staggered manner over the course of 3 years. So for example, in the first year, it will be imposed at 12%, followed by 11.5% in the next year and 11% in the third year. We also write in news on a positive note. Now it has received an order worth $3.6 million from Zimbabwe's Berhad Development. Now though not of a very significant size, but it does add to the export book and expands its international presence, right? And of course we have Bharat Forge signing the small arms contract with Ministry of Defense. And other than that, we have Orient Tech in news, again on a positive note. Now it jumped 20% upper circuit in trade yesterday on account of the 1:10 bonus issue announcement, right? So for every 10 shares of the shareholders, they will receive one extra share. Now the record date for this bonus issue is set on January 5th of 2026. And other than that, we also have stocks such as Eternal and Swiggy in news. We should keep an eye out for both of them as their delivery workers have called for an all India strike today. So yes, those are some of the stocks in spotlight today. Back to you.
Okay, thank you so much for that, Ishika. Of course, all of those stocks in news. Kunal, very quickly, Bharat Forge on charts.
See, I think at current levels, I was just looking at the charts for Bharat Forge. It starts to look a little bit more attractive, especially the fact that the stock is trading at the 1500, 1400, 1450 kind of a zone. But the only fact is that there was a breakout which was seen for Bharat Forge almost a couple of weeks back when the stock was at 1475-ish kind of a zone. But then post that, the stock went through a very mild correction. So that indicates that even though the near-term charts are positive, but it still lacks that momentum and that zing for the stock to break out and sustain the momentum on the higher side. That's the missing quality which I would believe, which is there for Bharat Forge purely in terms of the charts and the technical structure. So I would probably, wait for, Bharat Forge to try and come back into a strong support territory because in these kind of trades, if you buy momentum, then you have to wait for a prolonged period of time for these stocks to get back into a breakout. Rather, the better strategy is to wait for these stocks to come back to a support. In this case, for Bharat Forge, that would be closer to 1420, 1430 mark. So, in case if the stock drops down another 30 to 40 points from current levels, that's the point which I would initiate a buy in Bharat Forge.
Kunal, how do you look at some of the consumption stocks? We've seen a good pickup in volumes happening after the GST, but going into 2026 first quarter, do you see enough steam left in some of these stocks?
So if you're asking about consumption names, FMCG stocks, I would believe that except for very few names, I think Britannia was the only stock which was looking strong. Marico was the other name which had shown decent chart structures. But most of the other names, so I was looking at the charts for HUL, the stock has dropped down 200 points in just the last, I think, 1 to 1.5 odd months from 2,500, 400 levels to 2,300 or sub 300 mark, where the stock is trading right now. You look at ITC, that stock is also languishing below its 200 moving averages. So most of the stocks within the consumption pack, I think except for the likes of maybe Britannia and Marico, they are the ones which are into an underperforming spree. Look at Colpal, Colgate Palmolive. That's a stock which has been beaten down significantly. I think if I'm not wrong, it's down almost 40% from the 2024 highs for itself. So that indicates that the near to medium term trend for many of these FMCG stocks is on the downside. Now, the first reversal point which we look out for is either the indicators come into an oversold territory for most of the stocks, which has still not happened for the FMCG names, or we come to a point where at least 50% of the stocks come back above their 50 DMAs or the 200 moving averages. Even that's not the case so far right now for many of these FMCG names. And the biggest part is that they lack that leadership quality in terms of individual stocks. You don't have too many stocks which are leading the charge from the front and then guiding the entire sector as such. So I think on the back of these three missing points, I would not be too much keen into investing into FMCG stocks purely from a trading perspective as of now.
Okay, that's the view coming in on the FMCG space. But the year gone by has really been all about asset allocation. So let's get you a roundup of what powered your portfolio in the year gone by and what asset classes performed the best. Kanishka is here with that analysis.
Absolutely. It's what a year it's been. As we step into 2026, here's a quick recap of how your portfolio was powered in 2025. Well, equities did post very steady gains. Now, if you talk about equities, it was NASDAQ which really led the charts with tech-driven outperformance. Other than that, it was definitely the precious metal space which actually led charts as far as the leaderboard is concerned. So yes, precious metals continue to dominate the leaderboard. Gold, silver, they continue to give many-fold returns. So yes, that's about the precious metal space. Cryptocurrency, that however remained volatile, especially in the first half of the year. We saw significant gains, but towards the latter half, we have registered some losses. FD rates, well, yet absolutely steady, down about 55 basis points in the year gone by. So yes, very steady moves as far as FD rates are concerned. But let's get started and talk about each one of these. And let's start with equities and see how each of them fared. If you talk about the Nifty, it gave a return of 9.7% in the year gone by. Sensex too has seen gains of about 8.3% in the year gone by. And NASDAQ, that really led the leaderboard with gains of more than 21% in the year 2025. But now let's also talk about commodities. Well, they clearly dazzle this time around. Now, Gold that has seen gains of about 65% in 2025. So yes, solid gains over there. But silver, that has really more than doubled your money. 664% of gains on silver is what we have seen in 2025. Bitcoin, however, it saw losses of about 6% as far as 2025 is concerned. But from January to July, that is nearly in the first half or so, about 7 months, it delivered a cool 24% gain, showing some excitement and also volatility that crypto can bring along. Meanwhile, FD rates, of course, eased by 55 basis points in 2025 following RBI rate revisions, which reflect softer interest conditions. Now, which means that while FD returns may not be very high for you, those who have loans, they did see some much needed relief. So that's about the YTD returns from some of the key assets. But let's talk about where did your money really dazzle? Where did that work really hard? And how does your portfolio stand? So let's break that down for you. Say if you invested a lakh rupees across categories, let's take a look at your investment that would have been in Nasdaq. That would now be worth about 1,21,180 rupees. Nifty would have given a return and it would now be at 1,09,700 rupees. Sensex would be now worth about 1,08,360 rupees. So that's about equities. But now on to the big gainers over there. Precious metal space. Now, if you bought gold, say about 1 lakh rupees at the start of this year, its value would now be 1,65,350 rupees. Even higher returns from silver, more than double, 2,63,980 rupees. So yes, very high returns of silver. Meanwhile, Bitcoin, that would have lost about 5,900 rupees or 6,000 rupees or so. So yes, very volatile moves in crypto. But now on to the safe and steady bet, that's FD. 1 lakh FD must have grown to about 1,68,000 rupees. So that's a safe and reliable bet. So yes, that's how your portfolio must have performed. But yes, so the big key takeaway, equities were the strong one. Tech leading the charts with Nasdaq, metals dazzle, crypto thrilled, and FDs, they did stay safe. Now, 2025 does prove that the right mix can make your money hard. And yes, here's to wishing a very healthy portfolio in 2026 as well.
Right, staggering as it may be, and to think of it, one feels like the Nifty has done nothing really, but still it managed an 8% return.
9% return plus and dividend. If
Dividend
like
income.
Harsh was saying, then it's a almost 10% return that's coming in for an index which has stayed flat during the year.
Which is not bad at all. So if you're a SIP investor, you've done fairly well for yourself.
Yeah, your power of compounding works.
Yes.
But Dipan, when you look at silver, when you look at gold, that's when pure equity investors feel the pinch a little bit. Do you think asset allocation will be a strategy which will work for 2026 as well?
Aisha, asset allocation is a strategy for decades and centuries, and investors need to figure out what is working for them and then follow that strategy over a longer period of time. I mean, could be gold, could be equities, real estate, whatever gives comfort is the most important thing. Because end of the day, asset allocation and investing, there is definitely an emotional aspect to the whole thing. So fear and greed play a big role. So I think asset allocation is very important from a wealth management perspective.
Dipan, really the golden question is that what's the asset allocation supposed to be like for 2026? How are you lining it up? And yes, these are all returns for 2025.
What's the highest asset allocated asset?
Absolute.
Between the bond, Nifty, gold, Bitcoin,
Silver.
Nasdaq also.
Nasdaq also means if you have that thing, Nasdaq also. So between all those four or five asset classes, how will you put, say, 100 rupees across for 2026? Deepan?
Is that question for me? I think I just wanted to. Yeah, well, so in my 30 years of investing, I've always been 100% into equities. And of that, 50-60% is always in mid-cap stocks. So I don't mind waiting patiently. If a year or two doesn't go well for equities, I'm fine. When the revival comes, when the sort of stocks start giving handsome returns, is anybody's guess. But remaining loyal and faithful to one particular asset class has worked very, very well for me. So, and I remain very positive on 2026. I truly expect earnings to revive across the board, and that should benefit a whole host of small mid-cap stocks. And I would just like to add that although the Nifty is up about 9-10% or so, more than 70% of the stocks on NSE have given negative returns, and 30-40% have corrected by more than, I would say, 20-25% or so. So actually, 2025 has been like a disguised bear market, and many portfolios have seen huge knocks over there. And I expect that 2026 will be much, much better, although selective. But yes, I think there'll be great opportunities in 2026.
Kunal at it. Dipan, with regard to steel and commodities, where do you see some of these stocks headed? Something like a Hind Copper has done exceptionally well. Talk to us about that one, and some of the other stocks within the metals basket. Which ones do you prefer from a fundamental perspective?
So I think investors should temper their returns when it comes to metals, precious metals, as well as industrial metals and even metal stocks per se. And although one should remain equal weight, maybe not underweight, but shouldn't expect similar type of returns because these are cyclical industries and capacities do come on stream. Recycling also picks up, and alternatives are found if the prices zoom up for a specific metal. Having said that, I think on a longer term basis, definitely Vedanta is something investors could consider, and it's a stock in which we are invested in. And the reason for that is that this particular corporate action of splitting into five companies will certainly unlock value. Hopefully, if one or two of the businesses are divested, then the cloud around promoters or other promoter group company debt that may get kind of addressed over there. And I think amongst all the metal stocks which are listed, they are the best expansion plans and low cost production capacities when it comes to the metals which matter, that being silver, zinc, and copper, and aluminum as well. So very positive on Vedanta, but also Hindalco rather also is another stock that investors would consider. In the entire metal spectrum, I would say be long-term positive on the non-ferrous metals. And of course, there could be trading rallies in the ferrous metals because a lot of capacity is coming on stream for select companies like JSPL and JSW Steel. But then I think a lot of the positives have got factored in. And the kind of return and the up move we get in non-ferrous metals because of rupee depreciation and overall global dynamics, we don't see the similar kind of moves in steel.
Absolutely. Dipan, curious to know in the last quarter or so if you've recommended adding positions in any key sectors or stocks.
No, I think that, as I said, we've been very positive and we've been reducing cash levels, increasing investments in equities. And as I said, I think software services looks good. Another sector that investors could consider is pharma. And now I think if 2025, the investment theme was domestic focused stocks because of GST cut and interest rate cut and lower income tax rates, I think 2026 could be all about externally focused companies. Hopefully, we would have a trade settlement, trade deal with US, and that will lift the cloud and it'll improve the sentiment in a whole host of export-oriented businesses, be it software services or pharma or textiles for that matter. So I think the strategy for 2026 has to be export-oriented businesses. And within the pharma space, companies which are done exceptionally well. I think last few quarters or so, especially companies like Lupin, Biocon, which has a slightly differentiated business model and looking very good at these levels. Also, one big uncertainty around Biocon becoming a holding company that has got completely resolved, thankfully, by the management. And they have done some interesting acquisitions which should start paying off handsomely over the next few quarters or so. So, like that, I think industry by industry, there are good opportunities for investors to pursue. And as I said, I think within textile space also, company like Gokul Das, which have been beaten down, some of the home textile companies, which have not done well. Wellspun is there, Endocount is there. Certainly, they could you could see good returns over there if we have a good settlement trade deal with US.
Okay, quite interesting there and a whole bunch of stocks. But what about the newsmakers this morning? Kanishka is here to address that.
Absolutely. So several stocks that we're talking about this morning and tracking in trade today. First up, let's talk about some of the counters that are going to enter the F&O segment. Today, it's the likes of Swiggy, Bajaj Holdings, Vari Energies and Premier Energies. All of these counters are going to enter the F&O segment today, so let's watch out for them. Next up, let's talk about telecom stocks here. Vodafone, Idea, Airtel, all of these are going to be in focus today. Why? Because the Telecom Regulatory Authority of India, or TRAI, has made some suggestions to regulate the sale of foreign SIMs and eSIM cards. So these are counters to be watching out for today in trade. Next up, the lock-in period is starting for Kalpataru projects and Acme Fintrade. So these two counters also will be tracking today in trade. Next up, there is NACL Industries. For this, the board is going to mull fundraising today via a rights issue. So yet another counter to track in trade today. And lastly, we have Torrent Pharma, which is going to be in focus because they have announced that they have a board meeting on January 5th. This is to consider issuing NCDs on a private placement basis. So yes, that's the latest on Torrent Pharma and tracking all of these counters in trade today.
Okay. The other one will be Privy Speciality. Firstly, thank you so much, Karishka, for that. But Privy Speciality will be the other one, which will also be in focus. You have a block deal where the promoter is likely to sell around 6.3% with an option to sell more. Now, the quantity of the additional upsize is not really specified in the term sheet. But what the promoter currently holds is around 69.9% stake. So the stake will come off. Also, the likely sale is at an 11% discount to yesterday's close on the NSE. In terms of the stock move yesterday, the stock was up 3% in trade. This is Privy Speciality Chemicals that we're talking about. The deal value is around 700 crores. So it's a large deal which is likely to come through with Motilal Oswal and DAM Capital as book running lead managers, which are BRLMs, and therefore those will also likely be in focus because they will get a fee as a result of this deal. So you want to keep your eye out on those 2-3 counters as a result of this. Kunal, Privy on charts, of course the stock has done extremely well, but do you have a view?
Well, just looking at this, I was just looking at the charts for the last 3 years. The stock has moved from 1100 to now 3000 plus levels where it's trading right now. Seems to be a decent chart over here, even though I don't track it very, very closely. But I think just looking at the charts preliminarily, it seems to be into a good longer term uptrend, something which has lasted for the last 3 years for the stock price. I think again it's up 84% so far this calendar year. So that tells you that the stock has been quite consistent in terms of the entire trend for the entire year 2025. Looks to be an interesting chart. Near term wise, we may be looking at say 2900, 2950 as a support for the stock in the very near term.
Well, Eternal Swiggy are the other ones which are going to be in focus, and potential gig worker strike may have limited impact on food delivery and quick commerce players. That's the word coming in from Elara Securities, although it seems that the strike this time is much more nationwide and widespread. Let me take it across to Snehi and figure out how big this disruption could be. Snehi?
Well, yes. So watch out for names like Zomato, that's Eternal, and Swiggy, because we understand that the gig workers strike that took place on the 25th of December is also going to happen today, which is 31st December. The strike has been called by delivery workers across major food delivery and e-commerce platforms like Swiggy, Zomato, Zepto, Blinkit, Amazon, and Flipkart. But the two players from the listed space are Zomato and Swiggy, so watch out for them. The strike has been called by Telangana Gig and Platform Workers Union and also the Indian Federation of App-Based Transport Workers. Before we understand the impact, let's understand why is this strike being called in the first place. Unions are seeking job security, higher pay, safer working conditions, and access to social security benefits. They are demanding transparent and fair pay structures. They want a breakup of the total order that a customer is placing and how much of that is actually going to the delivery person. They also want the withdrawal of the ultra-fast model of quick delivery and the 10-minute delivery system that's in place right now, because they believe that this is not safe for delivery workers. They want assured work allocation and mandatory rest breaks, and they're also asking for app level grievance redressal mechanisms and pension benefits. Just to understand what India's gig workers platform looks like, in 2024-25 this was 10 million workers, projected to go up all the way to 23.5 million. So 2.3% growth is what we're 2.3 times growth is what PIB, that's Press Information Bureau, is projecting all the way up to 2030. Now let's understand what the impact could be, and this is coming in from Elara Securities, wherein Karan Torani says that December 25, 31 and Jan 1 are peak demand days for some of the platform companies. Platforms typically record higher volumes in usual days. The timing of this strike announcement is critical, but there are several factors that could limit the success of its strike. Number one is how many people are participating. When we spoke to the Telangana Union head on Christmas Day, he did say that about 40,000 to 50,000 people are participating.
estimating, which is very nominal in terms of the total gig workers in the country. Today, this amount is expected to go up to 1.5 lakh workers. So let's see if that causes any disruptions in orders. He's also saying that overall order volumes will be affected by 10 to 20% in this region. This is from Karan Taurani, and he says that they could translate into negative impact from 0.3 to 0.7%. That's the word coming in from Elara. So on Zomato, the strike may lower the GOV growth by 40 to 80 bips for Q3. For Blinkit, there could be a revenue downgrade of 0.3 to 0.7%, and an increase in their adjusted EBITDA loss by roughly 2.7 to 5.4 crore rupees, which is absolutely immaterial. For Swiggy, for food delivery, the revenue downgrade could be about 0.3 to 0.7% again. For Instamart, the increase in annual adjusted EBITDA loss could be again between 2.5 and 5 crores, which is very immaterial in the bigger scheme of things. So yes, it will all depend on how many people are participating, if services are actually disrupted or not. Because remember, on Christmas Day, everything was working smoothly. So we'll just have to wait and see what the impact is of the strike today.
Interesting. Dipan, how do you think the dynamics right now for the incumbent, which is Eternal, going to play out now with Zepto as well filing in for IPO? And just yesterday we had the news that, the Blinkit CFO had stepped down. The stock also is seeing some amount of correction play out.
Yeah, I think Aisha, these are great long-term stories, and one cannot really be tracking them on a day-to-day or a quarter-to-quarter basis. We have to give adequate latitude and patience to the management to work out their strategies. And there could be two players, three players, and there are many others also which are attempting this quick commerce field, like Tata's are there, Reliance is there, even Amazon is looking at it. But clearly, I think the Eternal has got an edge, and they are ahead of the competition. They have got deep pockets. They understand this business also better, and they are basically feeding into customer habits, and that's a very strong long-term trend. So I'm very positive on the stocks, Swiggy, Eternal. We could look at even Zepto when it goes public. But as I said, I think you need to be patient. These are stocks, which can deliver fantastic returns as the decade comes to an end, because they'll continue to grow at, higher than the GDP growth rates, anyway 15, 17% or so. And they will reach a tipping point very soon where they start to become solidly profitable. So I think, you need to have small allocation to such companies and not try and track them so minutely as you would for other investments.
Okay. Dipan, we'll let you go on that note. Thank you so much for coming in and giving us your views.